Hey everybody, welcome to Trading Capital. Head Market Analyst here, and we're going to jump right into the positions and new trades that we entered and added to today. Today was a pretty busy day for the markets. There were a couple key new positions that we jumped into. The first one being here is AXP, American Express. So we, Trading Capital, are shorting American Express. The entry that we got in today was 185.51. You can see by this dotted green line over here. We decided to short AXP at this level, and it's just a starter position as per usual and as per our trading style. But the reason why we're starting to short AXP is, well, when you look at these three new highs that they've made in over the last several months. So really starting in July here, going to October, and going to February, American Express has continued to see some upside strength. But this type of formation that we're witnessing is this broadening formation. And actually, let's flip to the weekly. It gives a better picture just because you can actually see it has a flat bottom on a weekly basis. If you see all these different flat bottom areas where the price action here closed above, you have many wicks, but you have this flat bottom zone that you can trade against. But when you look at this pattern, this is actually a broadening formation, and a broadening formation is typically bearish, especially when it's happening at the all-time highs, which American Express is. So when you see this broadening formation, there's always the chance that you can go retest the top of the channel. But that would be your resistance. As you can see here, you've made new all-time high, new all-time high, new all-time high. And you have to remember the type of stock that American Express is. American Express is a large company, and it's an institutional stock. There's lots of distribution signals that are happening up here to me. Just by noticing the amount of tails here, that shows that there's major selling and distribution happening. But when American Express constantly makes a new high, funds have to trim their allocation. And this is typically what happens when stocks are making all-time highs, especially when the stock is an institutional stock. It's different if it's a meme stock, something that the Reddit Wall Street bets or one of the Wall Street groups are trading. But when it's an institutional stock and it continues to make new all-time highs, companies have to trim their weighting in their position, in their portfolio. Say a fund has a maximum of 5% weighting that they can take in AXP. Well, if AXP is continuously making new all-time highs, which it has been over the last several months, funds have to trim. Well, we're now in the process where, if you notice just based on earnings here reported, it's had a huge pop. Earnings here, it had a little bit of rally, and then it sold off. Earnings here, pretty much sold off. What earnings suggests is there's usually a little rally, but then the selling precedes. And this is starting to really happen ever since we've entered the tightening monetary cycle. Ever since we started hearing the market chatter back in mid-July, that's really when interest rates, not the mainstream media were discussing it, but certain institutional investor circles, the big important money, was certainly discussing monetary policy change and how to adapt to the new onset of economic conditions that we're going to be experiencing over the next 2 to 3 years. So clearly distribution is happening, and as you go into earnings, it typically rallies, but then it sells off. I'm at a comfortable level here, shorting into this topping pattern. Even if you take away this bottom trend line, you can kind of argue that you're making this topping formation here. You have this left shoulder, a head, and a right shoulder. Now the question is, once you break this trend line down here, then you're going to head much lower. And ultimately, where do I think this goes? There's a tremendous gap fill down here on the charts that I do think has to be filled, but that's roughly a 50% drop if that gets filled. Now, one of the things that supports this stock for going down is, well, insider selling has occurred. The insider, the president, sold 50% of his holdings at roughly $192.66 per share, basically on the top of this green candle. So right near the highs. So when an when an institutional person, or sorry, an insider like the president sells their stock, and specifically 50%, a majority of their stock, then that starts to question, okay, what are they expecting? Is their forward guidance going to earnings going to be weak? Potentially. And I'm in the camp that the economy slows, GDP shrinks. We had the World Bank today drop their GDP forecast. I believe it was from 4.1% in 2022, revised down to 3.4%. So that's a tremendous drop in overall GDP. And with GDP shrinking and trading capital having the view that the economy will start to slow as economic policy favors a slowdown, that means a company like American Express, with less liquidity in the system, there's less transactions happening, there's less people buying goods, there's less credit being extended. It all favors the fact that this stock should come down. And the fact that it's still trading near the all-time highs in a tightening cycle, it just provides that there's tremendous opportunity. That being said, could it go to the top of this channel? Absolutely. But we have plenty of room to maneuver. I'm prepared to take this specific position, upwards of 6 to 7% of my portfolio in terms of a short. But needless to say, we're only at 1%, so we have tons of room to add and maneuver and get ourselves in a great position for when the pullback does occur. And you can notice that the pullbacks have started to happen more consistently at the highs here, and that generally shows you that there's a topping pattern at play. Distribution is happening. There's lots of sellers lurking at these highs to sell into any of the buyers that are willing to take the risk and buy at these highs.